Accounts receivable review. Just a quick review. Well, number one, the accounts receivable journal entry. That we know. Cost of goods sold goes along with your sales, okay? So the problem will either state a percentage that is cost of goods sold, or it will state to ignore the cost of goods sold. So look for the application when you're dealing with accounts receivable journal entries and adjustments. Okay, item number 2, we have a gross and net methodology for posting sales discounts. So we have here a sale of 25,000 with terms 1-10, comma, net 30, all paid within terms. Okay, so I have accounts receivable 25,000, sales 25,000. Subsequently, cash was received within the 10 days, and they paid 24,750. So I debit sales discount for the 1%, and accounts receivable is credited for the full amount. Okay. So under the net method, my accounts receivable would be debited 24,750 and sales 24,750, the net amount. And then they would make a payment. Cash I would receive of 24,750, the same methodology, and the accounts receivable would then be 24,750, and no entry to sales discounts. So the net method reduces sales on the income statement. Here, my sales is net here of the sales discount. So depending upon how much is taken or how much you have during the current period, you could have a little bit skewed sales. So they're gross and net method. The net method is used if most of your accounts receivable customer take the sales discount. So we had a $25,000 sale. Terms were 1% 10, net 30, all paid within terms. Okay. What if they don't pay within terms? Okay. Accounts receivable, 25,000. Sales, 25,000. They receive cash of 14,850, and they take a sales discount of 10% of what they submitted. So the accounts receivable that they paid was 15,000 of it. So remaining 10,000 paid later. So after the discount date, they received another payment of 10,000 and cleared the accounts receivable for 10,000. So in this case, we just have a lower amount in the sales discounts and allowances for the gross method. Now for the net method, they received cash of 14,850, and they take the accounts receivable for 14,850. Okay. So they debit cash and credit accounts receivable. Now this $10,000 payment, they also pay the 10,000 because they're outside the discount period, but accounts receivable in this case is 9,900 credit, and sales discount forfeited is 100, 1% of the 10,000 that they forfeited. Okay, can we see that? Okay, so under the net method, when they don't meet the discount period, we have this special entry that sends the discount forfeited, okay, at a credit balance there. So we have a discount forfeited, accounts receivable for $9,900, and you pay the full amount. Okay, this has been a review real quick of accounts receivable and how to post the discount on terms.